Okay, good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor Channel. We're just 3 minutes away now from our Fed FOMC report. It's a big afternoon, huge. You can see my portfolio started to pick up since I've been gone since this morning. I picked up a few more shares of SoFi, a few more shares of Google, and all the other ones I set in automatic. I've reapplied more buys again. So if we get a sudden crash, I will pick it up. So this is the Fed FOMC report live with Jerome Powell. He'll be live on the show. Where else would he be than the Martyn Lucas Investor Channel? Christopher Marantet, are you still here? Are you still in the chat? Let me know if you're here. Mike is still here. Let me know if you're in the chat now. I want to call out your name. If you're live with us, I want to call out your name. So put your name in the chat and I'll call your name out. Alex 45100. We are chilling you down. Hello, my brothers. Space tomorrow will skyrocket. Meanwhile, listen to Martin playing the piano and relax. Yes, I've got 2,100 shares of Virgin Galactic. I'm adding all the time. And I went to the Virgin Orbit space station a few weeks ago, and I'm going to the Virgin Galactic space station. Now, if you're watching, we've got only 14 likes, and we've got a lot more than that watching the video. If you support this video, please do help us grow. Smash the like button. Let's get to 20 likes in by the time the clock reaches 0. We could do that easily. In fact, let's get to 30 likes. We've got so many people watching right now. Smash the like button. Let's get to 30 likes by the time we get to 0 on the clock. Ready? Give us a thumbs up. There it is. Smash the like. We've got 18 now. Now we're going up. We should have 30 likes in 1 minute from now. There we go. Smash the like button. We're very close now. 18 likes. Keep on going. Come over from TikTok and join us. We're about to go live with the FOMC report. A huge day this afternoon. And here we go. We're up to 21 likes now. We're just 9 more likes and we've done it. A record when we start the show. Smash the like button. There it is. There we go. 22 likes now. 1 minute to go. Oh, we got another subscriber, Bri from OC. Welcome to you, Bri. People now coming across from TikTok. Welcome to all of you. Just watching you there, coming to YouTube. Just subscribe. Brian OC. Thank you much indeed. Okay, we need 8 more likes in the next 30 seconds, and we'll be good to go. There we go. Smash the like button. 24 likes. Very good. Very close. There we go. We're about to go live. 24 likes, just 6 more likes to go. Smash the like button, and here we go. Very exciting afternoon. Are we going to get a green day? Everybody thinks so. So the markets have sold off in preparation. So very, very exciting afternoon. Okay, let's go live. Here we go. Sergio Zapta just subscribed as well. The subscribers come flying in now. Here we go. All right. Welcome, everybody. Good morning, good afternoon, good evening, and welcome to the Martyn Lucas Investor Channel here live on YouTube, Facebook, Twitch, Instagram. We're absolutely TikTok. We're everywhere. Great to have you here. Let's get straight into it without further ado. This is the FOMC report. Jerome Powell in the house, joining us very, very shortly. Okay, very, very shortly indeed. We'll be going there live. As soon as it starts, we will be live with you. Okay, if it's your very first time here this afternoon, please do click subscribe and ring the bell. We go live up to 10 hours a day, bringing you all the breaking news as it happens. We are here for you, the family. We are here as a community helping everybody. Nothing is promoted, pumped or hyped or dumped. This is my real money, all up from $5,000. Let's bring in the comments. If you comment on the screen, I can put you in my draw. I can also, my free prize draw. There we go. We got Corwin Storm TV. Hello from TikTok. Are you a YouTuber? Looks like you are. I've got a really nice surprise for you. Any YouTubers here today? I love promoting YouTube channels and blowing your channel up live on my show. A bit like Mr. Beast, but better. All right. Okay, fantastic. Let's get ready to go. Let's go through all the positions now, see my stocks and see exactly where we are. There we go. Not that long to go now before we start. I've got it on, as soon as Jerome Powell makes the stage, I will bring it to you live. You won't miss a thing. came over from LinkedIn, said Enhanced Chicken. Welcome to you. Fantastic. We are the most engaged officially channel on YouTube. We have more live viewers that are members than any other channel on YouTube. 95% of our live viewers are members of our channel. Ask every one of our members and they will tell you why. I built this channel to help people. We reward you 20 times for what you put in. If you'd like to test that out and try it, I will prove it to you right now, live in our show. There's the invitation to join. If you become a member now, you will see amazing things will happen and you'll go, oh my God, I cannot believe I got that. And I do it for everyone. I'm here to help people. All right, let's go to our main portfolio. We are 39,000. Let's go through all the stocks and let's keep it going. If you've just tuned in, subscribe and ring the bell. And of course, smash that like button as well. All right, let's go through all my stocks right now and see what I've been buying this afternoon. Made lots of purchases this afternoon. I love it. I'm in a great position. And here we go. Right. Here is the S&P 500 down today. I've not bought any more. I'm very, very comfortable with that. This is my entire portfolio. Let's scroll down. Space, Virgin Galactic, will be covering this tomorrow in the earnings. I've now got 2,200 shares. Very, very good. This is my overall portfolio. VORB is now pumping up. We know why. I was there a few days ago. At the Virgin Orbit Space Station. These are all my positions. We'll go through them all in detail. I'm just showing you my full portfolio. People often ask. If you've just come in now and you want to be part of today's show and you want your name on the screen and you want me to call your name out, smash the like button. You can be in our free cash prize draw, free to enter, free for all on Friday. And we're giving a star prize away. It's free to enter, free for all. Someone has just called me. That should be on Do Not Disturb. Why am I getting that come up on my phone? No idea why someone is trying to call me live on the show. How did that happen? That's set for that's on Do Not Disturb, and yet someone's phone number came up. Anyway, no idea who that was. Let's scroll through, keep looking through. SoFi, IonQ, Walmart. That was a bit of a crazy moment, wasn't it? This is all my positions right now. Scroll to the bottom. There you go. There's my full portfolio. People often ask, margin call, LOL. This is sick. You never know. Yeah, it's probably your margin call. They phone me up and say, oi, Martin, we want all your money. It was Powell. Yeah, it was, Jerome Powell was just calling in. Let's go with that. Let's go with that. It was Powell. Let's go with that. I like that. I think that's good. It probably was Jerome Powell. So let's go back to that anyway. I've no idea what happened there. But anyway, there you go. So we're waiting. When it comes up, we will have it for you so you won't miss a thing. Let me go back to my full positions right now and let's go through. Let's go through. Not that long to go now. I'm very, very excited. It should be a huge afternoon. Jerome Powell live on the show. We got Pablo Penna just subscribed to the channel. Here's my portfolio. We bought some more of everything this afternoon, if I'm honest. I bought more Virgin Galactic. We're going to do the earnings report. We've got Robinhood earnings report right after tonight's show. Right after the show tonight. Here is the main channel where you are right now. And as you can see, we've got the closing bell after Jerome Powell. There we go. And then we've got the earnings for Robinhood. All coming up. We're live 10 hours a day, all the time, sharing everything with you. Here's my real position. 39,000. And let's carry on going through the stocks. Rivian is doing well. I like it. I like it. We've got Lucid up today. I'm not buying any more. Arrival is down near my all-time low. I might, in fact, I won't be buying any more. I don't see any point. I've got an order to go through at Amazon. This is my position. I might buy some more. Apple, I've got an order to go through. You can see my orders, limit buy, already placed in case there's a crash. There's Robinhood. I've got orders placed in case there's a crash before the earnings. All ready to go. I'm also buying, and I'm not buying McDonald's because I'm plenty up, 12.5%, need 13% up. Coca-Cola, I'm up, but again, same thing. I've got an order placed there for you as well. Look at all the followers on TikTok. Guys on TikTok, Thank you for all the follows. I want to do a special gift for all of you on TikTok. Two things. First of all, if you want to be in a free prize cash draw, it's completely free. I ask nothing from you other than to join me on youtube.com/Martyn Lucas Investor. The same name as the channel, links in the profile, whichever way you want to find me. I'm live right there now. This is my YouTube channel. We're getting ready for Jerome Powell's speech. We're going to be live. We'll bring it to you live as it happens. We're all prepared for it. Here we go. If you want to come over to YouTube, every Friday I give away the money I make in my show for free. Free to enter, free for all. I just love doing it. Why? Because I want to be better than Mr. Beast. I give away my own money. All you've got to do is come into YouTube and say, I'm from TikTok, and I will tell you how to be in the free prize draw. It's free to enter, free for all. Also, we're giving away a star prize on Friday as well. Great. And if you come into YouTube, I can put you on the screen. And one final thing. If you are a TikToker and you want to blow up your channel, I have 26,000 followers. If you become a subscriber, click the little star that appears at the top here. At the end of today's show, I will record, there's the star, there it is right there. I will record a video, put your channel on the screen, and I will promote your channel, invite my 26,000 followers to follow and subscribe to you. I do it for all my subscribers. I follow you back and I help everyone. I only follow my subscribers and members on YouTube. That way I engage in everyone. I answer all your questions, make you exclusive content. All you got to do is subscribe to me. Anyway, back to YouTube. Come and join us if you want to be in our free prize draw. Jerome Powell coming up very, very shortly. Okay, Coca-Cola. Let me go back now and have a look. Coca-Cola is moving up. I've got an order to buy more should I need to do so. Looking very, very nice indeed. We've got a record audience now coming through. This is absolutely great to see. Wow, the numbers are exploding. Absolutely exploding this afternoon. It's a huge afternoon. If you want the stocks to go up this afternoon, smash the like button. I will look into my crystal ball live right now. If we get 40 likes in the next 1 minute, I will look into the crystal ball and I will tell you whether the stocks are going to go up and it'll be a green day or not. We are very red right now. You've got 1 minute. If I get to 40 likes at the end of the minute, I will get my crystal ball out. I will look into it and I will tell you whether the stocks are going to go up this afternoon. All right, you've got 1 minute. Here we go. Smash the like button. Johnson & Johnson is moving up now nicely. I've got an order to buy more if it goes below my all-time low. Google, same thing. Oh, Microsoft going up. All of these, I've got orders. Meta Platforms, fantastic. It's presenting me an opportunity to buy more. Look at this. Thank you, TC, for your subscription. Down 20%. I'm ready to buy some more. My next order is placed. We've got 4 more likes to go. I'll look into my crystal ball. There we go. Time's up. I'll give you a couple more seconds if you will smash the like button. My next order on Meta, which is now the best value stock on the stock market, is 91.50. If it hits 91.50, I will buy more Meta. I keep buying it on the way down. SoFi, fantastic. I've been buying it all afternoon. Great earnings, great company. I've been buying it all afternoon. Walmart is powering away. I'm up 16.5%. Target is powering away as well. Tesco looking great in the UK. Lovely stuff. By the way, if anyone goes onto my all links button, I've got lots of free stocks to give away. Free for everyone. Just click on the links in my in the description. Right. We do have 40. So I'm going to look into my crystal ball and make my prediction for the afternoon. Are you all right? Okay. Are you ready? Okay, here we go. All right. I'm going to look into my crystal ball this afternoon and I am going to say 100% that I am going to be green this afternoon. I am going to be green, down 3% right now. I'm going to be green. What do you think? Do you agree with me? Do you agree with my prediction? That's what I think this afternoon. That's why I'm buying more. Rumble is not the next Facebook at all. Rumble is like a competitor to YouTube, but it's never going to replace YouTube and Google. Absolutely impossible. Mike Rogers, look at all the likes coming in. Thank you so much indeed for the follows, the likes. Meta is done. No, it's not. Absolutely not. Mark Zuckerberg, you might not like him, but he's innovative and he's created Facebook, one of the biggest businesses in the world. I don't even like Facebook, but I do like making money. So I don't agree with anyone that says Facebook is done. It has no debt on its balance sheet. Most companies do. And it's got 202.9 billion customers. Oh my gosh, unbelievable. So anyway, there's no way that Rumble is going to replace Facebook or I mean, bloody hell, basically all they do is share your video on a YouTube channel. My mate, Christopher Marantet, who's watching here right now, there he is, I'll put him on the screen. This guy here can code, and I bet you any money you like, he could make a string of code where you can put your YouTube channel, your YouTube videos on our YouTube channel. We can do that. Very, very easy. Shall I create a Rumble? We've already done it. It's called Live Streamer Cafe. We've already done it. We've given people the opportunity to perform live as musicians and artists for free, keep all the money, get paid instantly, and we take nothing, no commission at all. We already have built that system. If you are an artist or musician right now and you're interested, message me and I'll send you the details. It's free. You can go on as a performer, create, sing, perform. You get paid straight away. You keep all the money. We don't take any commission whatsoever. Absolutely brilliant. Absolutely brilliant. We've already built it. So forget Rumble. We've already built it. And you get paid. And it's free. And it's done. Anyway, there you go. You'll be hearing more about that when I hit 100,000 subscribers, which will be in about 2 years at the rate we're going. Anyway, just a little taster. We all need a crystal ball, or maybe many crystal balls, Martin. Absolutely right. We all need crystal balls. All right, let's get ready. Jerome Powell will be, the FOMC presentation will start in 15 minutes. At the moment I see Jerome Powell take the stage, you will all have that information. All right, so we're just getting ready. You're not going to miss anything, I promise you. The markets are now starting to recover. We are seeing it start to rebound. I've been buying the dips all day. I'm in a stronger position than I've ever been in my entire financial journey on this channel. So I'm very, very excited about it. And there we go. Really, really good. Wow, we've had a record number of people come through the channel in the first few minutes, 211. The subscriptions is absolutely rolling around like absolute nuts right now. Absolutely nuts. Thank you very much indeed. Right, smash the like button if you've just arrived. Absolutely awesome stuff. Smash the like button. Let's get ready to go. Very exciting. YouTube has 14.3 billion monthly users. Rumble has 78. Yeah, we're just putting that into context a minute. Fusion 301, just one of my researchers, just brought some information on the screen. There it is. YouTube has 14.3 billion monthly users, and Rumble has 78 million. I think we're okay. I think we'll be all right. Oh, my gosh. Anyway, it's all good. Inzar Lagri is over on Facebook. If you're over on Facebook, you need to be here on YouTube. This is the home of our channel. Join us here on youtube.com/Martyn Lucas Investor. All right, the same name as the Facebook channel you are watching right now, but Martyn Lucas Investor on YouTube. That's where you need to be. All right. Now then, if you want to be in our free cash prize draw, just ask me in the chat and I will tell you how you can be in it. So while we're waiting for Jerome Powell to speak, he will be speaking very, very shortly. Let me just check a couple of things. Yep, we're all good. Yep, the markets are going up. We're getting ready. Even I came over from Facebook. Even Shad came over from Facebook. Let's have a drink out of the magic Martyn Lucas glass. You drink out of this glass, you make money. Okay. Bree says, how do I enter? I want to be in the free prize draw. All right. Okay. First of all, have you subscribed to the channel? Have you subscribed to me? Have you done it? Have you done it? Have you subscribed? Okay then. Have you thumbed up the video? Okay, you've done it. All right. Every single Friday, we give a cash prize away. The money I make on the video, I give away for free every Friday. And every first Friday of the month, I have another cash prize as well. So how do you win? First of all then, here we go. Here's how you win free money. Everybody, is everyone paying attention? Are you on YouTube yet? Still on TikTok? Okay, you're going to miss out then. YouTube.com/Martyn Lucas Investor. Same name as this. Come and join me. So here we go. This is how you win. First of all, every first Friday of the month, I give away all the money I make on Twitch in subscriptions. You can subscribe to me for free on Twitch using Amazon Prime. You just turn Amazon Gaming on. It's completely free. And you can subscribe to my channel every month on every first Friday of the month, which is this Friday. I give away live in the show, live cash to you. There is my Twitch channel. So all you got to do is follow me and subscribe using Amazon Prime. You can pay for it if you want or do it for free. Use Amazon Prime Gaming. It's free. Just turn it on. There's your first cash giveaway I do every single Friday. And I can't wait until I've got 1 million subscribers and I'll give away $1 million. I mean, I will do it. The more I get, the more I give. I give what I get. I don't keep anything for myself. It's all for you, right? That's number one. Number two, every Friday, I give away the cash I make in the video. How do you get into that? Well, very, very easy. Every Sunday, 8 a.m. Central, 9 a.m. Eastern, I send out a free email newsletter. And in the newsletter, it tells you what video to watch. It's like a minute video. Leave a comment and you'll be in the draw every Friday in our opening bell show. We do it every single week. Completely free as well. How do you get the new newsletter? All you do is click on this link here. Here is the link. It's martynlucas.com/links. All the links below are in my description. There it is. There it is in the chat for you right now. And when you click on it, it brings you to the links page. There is the Martyn Lucas Investor Newsletter. You put your email in. Now it will send you a verification email. The verification email will always go into your junk folder. Why? Because it contains the word cash prize draw. Why? Because it is. I give free money away and people always think that's scammy. Well, it isn't. It's real. And that's why I do it. So there you go. Martyn, the day trader at martynlucas.com. That's the email you got to search for. I've just put it in the chat. You simply search for that email. It'll always be in your junk folder and then get verified. And you can always unsubscribe from the newsletter, but I don't know why you would, because the more members I get, the more views I get, the more money I give away. And it's free to enter every Friday. And once you've registered, you will be in it every single week. There, I subscribed on Twitch. Happy now. Let's have a quick look. Christopher Marantet. Yes, it's just gone up. We've got only 9 subscribers now. So you got a 1 in 9 chance of winning. There's my subscribers on Twitch. Look, there you go. The reason why it's dropped to 9 is I took a vacation and everybody let their, I went away for the whole month and everybody let their subscribers lapse. So there you go. You've just got to update it every month. It doesn't do it automatically. It does it for free if you use Amazon Prime. There you go. There it is. Now then, the other one is the newsletter every week. There will be all of my cash prize giveaways. Now then, to make it easier, because this is a special one-off event, this Friday, while I was away on holiday, I recorded a playlist. The playlist is here. It's right on top of the channel. There it is, and there is the playlist, Investing on the Stock Market. All you got to do is click play all for this playlist, let it run through, leave a comment and like. It explains everything in the video, and you will be in the draw for Friday. Only 6 people, only 6 have watched all the videos. All you got to do is let the playlist run through. That's all you got to do. And you can then choose a star prize, the most expensive thing you want from my merchandise shop this week. This week I'm giving away a prize for that one and the cash on Twitch. Easy, right? And that's what I do every single week. All right. Now, if you become a member of my channel, I'm actually known as the World Piano Man. If you become a member, you can become a member from a couple of bucks a month if you want to be, and you will notice that 95% of our live viewers are members. It's the highest engagement rate on YouTube, even more than Mr. Beast. If you become a member, you get many, many perks designed to benefit you. I believe if I make a YouTube channel where it serves you best rather than me, I'll become the best channel in the world. That's what I believe. And ask every one of my members, and you will see nearly every single person who watches me live is a member. Ask them why they do it, and they'll tell you. I'll promote your TikTok. I'll promote your YouTube. I'll give you free prizes. You can have a concert, a 20-minute fundraiser, happy birthdays. I will put you on my homepage of my YouTube channel. The list goes on and on and on. You can have a poll in the show, whatever you like. Many, many perks, many, many benefits if you are a member. There is the membership in the chat. Right. We're getting ready for Jerome Powell. He's not speaking yet. I will be covering it live. We're watching my stocks rally exactly as I predicted. I believe it'll be a green day. Positive Vibes is now following me on Twitch. Thank you very much. Now make sure you subscribe using Amazon Prime. It's free, and you will be in our free draw every Friday in the opening bell. Very, very easy. Thank you very much for following me on Twitch. Absolutely great. Okay, let me look into Jerome Powell. Is he ready? No, he's not ready yet. We are waiting for him to come on air. And when he does, you will get it live. Thank you for all the follows. We've now got nearly 27,000 followers on TikTok. It's going up every day, faster and faster. If anyone subscribes to me today, hit the little star button that appears up here. At the end of today's show, I will record a video for you, put your channel, there's the star, there it is right there. I'll put your channel on the TV screen behind me, make a video and invite my 26, nearly 27,000 followers to follow and subscribe to you. I do it for all of my subscribers on TikTok. It's my gift to you. Plus you get exclusive content. I reply to all your answers, your comments, and I follow back all my subscribers and comment and promote your channels. I work 10 hours a day in the studio to help all my subscribers and members on YouTube. There you go. And subscribers on TikTok. That's what I meant to say. Right. Where are we right now? Let's have a little look. Fantastic. Should have a quick look at Jerome Powell. Let's see how many people have come through the show. Look at that. Record number. 300 people have come through the show already. Very, very quick. Shall I have a quick look at the subscribers? It's been rolling around. Look at that. It just keeps on rolling around. We started at 5,133 a couple of days ago and now 5,176. We are growing incredibly quickly. I want to be better than Mr. Beast. And with your help, the more I get, the more I give. I don't want nothing for me. I just want to help you guys. I love doing it. I want to be able to give away $1 million. I do. And with your help, we can do it. All you got to do is subscribe, follow me. Easy. Easy peasy. Dead easy. Right. Okay, let's get ready. Jerome Powell, not that. Oh, wow. We've got 100% again. Look at this. 100% record again. 100%. No YouTube channel has it. 57 likes, and we have 63 watching. We had 57 watching and 57 likes. For those of you that have just come in, smash the like button because we have the most engaged channel on YouTube. It's official, right? 95% of our live viewers are paid members, and everyone who watches likes. Come on, we got 57 likes, 63. I'll look into my crystal ball again if we get 60 likes in the next 1 minute. There you go. I'll look into my crystal ball. We need 2 more likes in 1 minute to make 60. And then we're going to go for 100. And if we get 100, there will be a special song at the end of the show. We might even do We Are the Champions by Freddie Mercury. Who wants to hear that? In the back of the studio, I will do We Are the Champions by Freddie Mercury. All right? We got 2 more likes to go in the next 20 seconds. Back here behind me, I will fill the studio with smoke, and I'll do We Are the Champions back there, light up the whole studio. If we get to 100 likes, we'll do that. Shall we do that? Be a bit of a celebration, right? Be a bit of a celebration because we're all going to make money this afternoon. At least you will if you've placed yourself perfectly. 59 likes. We've got 40 likes to go, and we'll do it. Okay, back to Jerome Powell. Let's see how we're doing right now. Stocks are coming up. I've got buy orders all over the place, ready to pick up the deals. We've now gone through 321. We've had 21 views in the last 30 seconds. Channel is growing faster and faster and faster every single day. And that's because of you, not because of me. I'm just driving the show. I'm just a train driver. All right, let's get ready. Jerome Powell, is he on stage yet? Let me have a little look. No, he's not. He's not there yet. We all want to hear Jerome Powell. When he speaks, I will be shush. I will be shush. We will listen in, but we'll keep our eye on the stocks. We'll keep our eye on the stocks when we know exactly what is happening. All right. Hi, everyone. Right then, if you put your name now on the screen, in the chat, I will put your name up on the screen, make you famous. Here we go. Jason Newman, you are now on the screen. That's one of our members. We've got Bill, Shin Dynasty, one of our members. How are you? We've got a newbie. We've got a guest here this afternoon. Would everybody, please, all my members, please put your city and country of where you're from, and but please put your city and country. Welcome a guest in. If you are a YouTuber, I've got a great gift for you if you become a member today. I can promote your channel. Got some wonderful gifts for you if you become a member of our channel. Who else have we got? Paddy from Italy. Right then, does anybody want to call in live to the show? This is for YouTube members only. Let me open the broadcast lounge. You can video call in. You can be live on the show. And you too can be part of today's show. All right, markets are mixed. Jason, Church of Logic, one of our moderators, members, also one of our research team. So there we go. If you want to call in, you can be like this. We have some star guests, as seen on Fox, CNN, all the major news networks. Is Kurt Wuckert. We're going to fly through these. There's Kurt.
I'm Kurt Wuckert Jr., and I am blessed to have been on The Day Trader. Please subscribe, watch everything.
There you go. And here's Bill.
Okay, I was sleeping one day back on August 18th, and I woke up to Martyn singing a song.
Nicky Boy Gaming.
Welcome to the Day Traders.
Welcome to the Day Trader.
It's an awesome show. I have been supporting it.
Hello, my name is Sam Hughes, and I pretend to be Sir Elton John for a living.
There you go.
Now, if you want music...
What about Patricia, Paddy from Italy?
Hello to everybody. I'm calling from Tuscany, near Pisa. I'm very, very happy to be here.
Lucas. He's
It's
a
very
cheeky
amazing.
chappy from the south of England, and he's a lot of fun.
What about Uzi Maki?
Hello to the family and the future family members. Izumaki here. I just wanted to say the Day Trader is one of the most honest, 100% open YouTubers.
What about Church of Logic?
Martin's an honest guy.
I have to first say that your show is amazing. Everyone needs to check out Martyn Lucas, the Day Trader. Amazing guy. Very honest. Very
there you
open.
go. There's some of our members. It's going to be a busy afternoon. You too can call in live to the show. You too can sponsor this channel. You can be a sponsor member for $99 a month. We go live 10 hours a day to tens of thousands of people across 12 different platforms at the same time. Become a member. You'll go on the homepage of my YouTube channel, and you can also have commercials played across the board during our shows. All right, we're getting ready for Jerome Powell. We're here to serve. We're here to grow the best YouTube channel in the world. All right, 1 minute, Martin. Stop mucking about. 1 minute. He won't speak until 1:30. 1 minute. Stop mucking about. Stop mucking about. He doesn't start speaking until 1:30. What are you talking about, 22? I know what's going on here. I know what I'm doing. And I'm telling you right now, he doesn't start speaking for a bit. I'm watching it live. Don't you worry about that. All right. No, the rate is out. Oh, I know the rate's out in 1 minute. Yeah. If any of my researchers could bring it to me. All right. Fed decision. We're waiting to bring it for you. Here we go. Here we go, here we go, here we go. Any second now, we are going to get this for you live here. Any second now, we'll get the information. Fed rate decision.
The Federal Reserve raising its short-term benchmark interest rate by 0.75 percentage points.
0.75.
3 3/4 to 4%. Now, the Fed laying the table for perhaps a slowdown on future rate hikes, saying in the statement that in determining future rate hikes, they will take into account the cumulative effect and the lag in monetary policy.
0.75. Up goes the stocks. We said it would. Not only is it 0.75, they're going to slow the rates down. Are you ready for a pump? Now, this is not the Fed report. When Jerome Powell speaks, it has even more consequence. We will come back to the speech when he speaks. He's not speaking yet. When he speaks, we will bring it to you. This is very, very exciting. This is exactly as we predicted. Exactly as predicted. I bought all the stocks. I'm very, very happy. I couldn't be happier, to be quite honest. It's gone exactly to plan, as it does. If you prepare and put the research in, you'll be fine. And that's exactly, just bought SoFi. You've got seconds now to buy stuff. I'm not saying go out and buy everything. You should already be in. They're going to pivot too soon. All right. This is all good. This is all good. I am very, 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 very happy with my position. I couldn't be happier. This is absolutely fantastic. Now, we are going to be back with Jerome Powell when he speaks. He hasn't spoken yet, but there goes my markets. I said this was going to happen. I said it would be a green day, 100%, no doubt about it. And you will get the speech live on the show with me. Look at this, guys. There you go. It's not just going to be green. It's going to be very green. It's going to be very green, particularly because I've been buying the dips all afternoon, but I haven't been buying the daily or the weekly or the monthly dips. Nothing like. I have been buying the dips of my all-time lowest prices. Let's get that absolutely clear. I have not been buying dips. I did that 6 months ago. I've been buying now and preparing and digging the ditches in the desert for months. For absolute months. Right, let's go back to the stocks right now and see where we are. Fantastic. 60 watching. There we go. Again, we've done it again. Very, very quickly. 62 likes, 60 watching, 100% likes again. Absolutely love it. Right, here we go. Let's go back to the main position and check out all my positions and see how good we are now. We have got, the S&P is up 0.7. This is going to be a huge day. Up goes Ford. Up goes Ford. Virgin Galactic. Look at that. All these buys I had never came up. Virgin Orbit. I'm not 2.8. It's not it. I went to Virgin Orbit. It might pop, but it will drop. This is not the time to buy it. You want to buy it at 268. I met the people at Virgin Orbit. I know how the stock trades. I'm not touching it. I've already made my money on it. I'll buy it again at 268. Tesla shot up. Oh my gosh. Rivian. This shouldn't come as a surprise to anyone. If this has come as a surprise to you, you haven't done your research. Church of Logic, he keeps saying, check Vorb. I'm looking at it. It's great, but it's 2.8%. It's not the 20% it deserves. It's not the 28% it deserves. For I know you're saying for Vorb it's good. Yeah, I get it, but let's have a look at the volume. Look at the volume. Let me refresh that screen because that's not reporting correctly. Let's have a little look at that screen. Sorry about the flare of white there. We'll come back to it when it freshes. Hang on, it's a bit white. There we go, that's better. Apologise for the flash of white. Don't want to give anybody a fit or anything. Watch for a dump now. Yes, exactly. Jerome Powell hasn't spoken yet. Volatility. If anyone chases this, you need your head read. You don't chase a pump, okay? You plan before. You don't do that, all right? So anyway, let's have a little look. The average volume is 85. The volume today is 32. It's below average. Nothing great, church. Nothing great. As I said, it wouldn't be. Okay, don't get excited about that yet. Arrival, a little bit of a pop. Let's go through. Oh, Amazon looking better. There we go, looking great. Grim Reaper, Powell incoming. Yeah. Just get ready for it. He's not speaking yet. When he speaks, I will have it. Apple is up, looking great. Robinhood is great. We've got the earnings after hours. We will be here for the earnings after hours. McDonald's up. Now that is great. I'm up 13.5%. Coca-Cola, I'm up 1.39. J&J, I'm up 3.23. This is great. Google, I'm down 9.97. I've been buying it all the way down. Here is Microsoft. I've been buying it all the way down. Meta Platforms, fantastic bargain of the stock market right now. I don't care. I'm not in a popularity contest. I'm not a Mark Zuckerberg fan. I don't even like Facebook. I'm on it. We're streaming on it live right now. We're live on Facebook right now. But I do like making money, and this is oversold. It's all done because they don't like the direction. They didn't like him when he started Facebook, and look what he created. They don't like him now he's starting Meta. The difference is he can sell, he can switch it around and go back to Facebook in a heartbeat. So there we go. I'm not selling anything, church. I've been digging the ditches now for 6 months, nearly a year, to plan for $100,000 portfolio. That's where my portfolio is going. That is what I'm aiming at. That is what I'm going to stick to. I am not selling anything right now. Absolutely not. Walmart, I'm up 17% on Walmart. Couldn't be better. Target, I'm up 10%. You've got to have a balanced portfolio. You've got to buy the right stocks. Canoe, up. On semiconductor, Tilray Brands, I'm still up 9.94%. The legislation like Canada in the US is coming. Ginkgo Bioworks up. Enphase Energy, until the world is 80% solar, this will keep going up, even though it's up 26,000%. So you stop scalping her? No, I'll scalp when it's right. It's not right now. You're not, I mean, you know, you got to value your stocks. Am I going to take 2%? No. I'm looking for 30, 40, 50% on my stocks. From where I've bought, from where they are valued, you've got to know your value. If somebody calls me up and says, would you sing at my gig? I go, yeah, $5,000. And they go, no, I can get someone for 100. I said, well, I'm sorry, go and get someone for 100 quid then. Why are you $5,000? That's very, very expensive. And my answer is, I'm very, very sorry. It's expensive to you, but it's not expensive to others. That's my value. And my stocks are my value. They are cheap right now. They are oversold right now. We've had 6 months of selling. You're going to sell for 2%? No, I'm going to sell for 50%. And not until I dictate when I sell my stocks. The Fed don't tell me or dictate to me where I'm going with my portfolio. Even though everybody says they do, they don't. They don't control my portfolio. I do. You can get to 100 grand easy. Just keep adding more cash. Yeah, you're right. I'll put 100 grand in and now I'm at 140. I don't mean bloody, you know what I mean. 100 grand by its own inflation, not me just put 100 grand in. Watch this textbook bull trap. It's not a bull trap. It's a bull trap if you buy it. It makes me laugh. Someone on TikTok saying to me, hang on, he really is. Let's have a look. Let's have a little look. What are you saying there? Dude, you are so annoying. Well, don't watch me then. I've got someone on TikTok saying you're annoying. Well, why are you watching me then? You've tuned into my channel and you're saying I'm annoying. Well, I'm sitting here making money, growing a YouTube channel, the most engaged TikTok, Twitch and YouTube channel in the world, officially on YouTube, 95% of members. So I'm doing something good. I've raised over $1 million for charities in this studio. I'm here to help people and you think I'm annoying. Fine. Don't watch me. Go and scroll through for naked ladies then. I don't care. Unbelievable. I mean, what's the point of that? Church of Logic speaking bear logic. What's he saying? Bear logic. Same with my wedding photography. Got to know your worth. There you go, Shad. Absolutely right. Absolutely right. You got to know your worth. You're only worth as much as you are worth to your customer, though. You can make up a price in your head. It means absolutely nothing. But at the end of the day, you've got to know how you compare to the competition. And I know my value and I know what I bring to the party. But at the end of the day, if no one's booking me or no one's paying me, it's the same as stocks, then you are too expensive, right? If nobody wants you, if no one's booking you. But if people are booking and paying you 5, 6, 7, I mean, that's the fees I get, then you're in the right place, aren't you? Anyway, Christopher, yep, artists are 100% devalued, often at their own hand. Know your worth. There you go, Chris. Now, just because I'm worth $5,000 doesn't mean you are. I'm taking the piss out of my friend now. He knows I love him. He knows he's going to come back with some sarcasm in a minute. I know he is. Anyway, We are waiting for Jerome Powell. He will speak any moment now. Take profit, take profit. I think you're a smart man and a good man. Corwin Storm TV. Well, I tell you what, Corwin Storm TV, are you a YouTuber? I'm worth 10 grand. Yes, you are, Chris. You come with hair and a beard and a bigger belly than me. Damn right you're worth 10 grand. Totally agree. Corwin Storm TV, are you a YouTuber? Are you trying to grow a YouTube channel? Because if you are, I want to do something for you. What stocks do you recommend for a teenager like me with only $100 or so? I started with 5 grand. You can, and up to 40 now. You can make money with $1. It's about percentages and repeat. That's all it is. It's not about amounts of money you've got. It's just about percentages. I can't give you any advice. I'm not a financial advisor. Just watch the show every day. See what I'm buying. See what everybody else is buying. You've got access here to some huge traders, very small traders, big investors, small investors. You can ask them anything. So there you go. Caden Youngquist, there you go. He'll tell you all about it. I'm a teenage investor as well. So, yeah, just keep... Jerome Powell isn't speaking yet. Oh, thank you for your honesty. Yeah, I won't promote, hype, pump, anything. What I will do is share with you my real... this is my real money. All of my real money. I have no money in the bank. I've shared with people on the show my bank account. I've got no mortgage. I've got no car loan. I sit here 10 hours a day, every day, live for you. And this is my real position. These are my real shares. This is all my money. I don't have money in another brokerage because I want you to see what's real. Everybody online is selling a story, trying to promote and hype their channel or whatever it is, whatever ends they have. My policy is give the best quality service, be real, be honest, give everything that you make to everybody, which is why I give away the cash prize all the time, and you will grow the best YouTube channel in the world. If you are committed and loyal and real and genuine, and that's what I do. And the moment I make up stories, this doesn't work. This doesn't work. So that's what this is about. So if you want hype and nonsense and buy Bitcoin, it's going to go to $1 million tomorrow, then go and watch BitBoy. Go and watch Cryptos Are Us. Go and watch Meet Kevin. Go and watch Graham Stepan. If you want the truth of my real money and my real shares with my real investments, and I spend 10 hours a day doing it, this is for you. All right? Okay. Let's have a cup of latte a minute. By the way, while we're doing this, if anyone becomes a member right now, we got surprises for you. Surprises for members. There is the invitation to join. Become a member. 95% of our viewers are members. More than Mr. Beast. He has 9% of his live viewers are members. Mine's 95. But right now, I see a few people who aren't members. Become members and get access to be able to call into the show, get all the perks and the benefits, and do that. And I'll tell you what you get once you've done it. Or you can just read it. It tells you. Corwin Storm TV. Baron, I talk about my investments on my channel. Hey, here he is. Caden Youngquist is coming on here trying to poach my audience. Caden Youngquist is actually one of our members. He's a silver member. And because of that, his very channel is on my YouTube channel. It's right here. We've got a massive audience, Caden. He's right there. Shall I share his YouTube channel? Shall I get everyone to click on it? I'm gonna just tempt him. I'll do it in a minute. It's not Members Day. I only do that on Fridays, but I might do it if he says something nice. I might do it, and I'll get everyone to subscribe to him. Everyone here, I'll get them to subscribe to him, and you will. Everyone does. Everyone supports everyone on this channel. Always positive, always winning. Everybody wins. Try the tea. I will be having the tea after work tonight, Bill. We're just unpacking it. Another subscriber. Thank you very much, Zimski. Online review. What happened to Papa Powell? Is he? Yes, he is speaking. Don't worry. You've been watching Graham Stepan, haven't you? Papa Powell. No, Andre Schick. You've been watching Andre Schick. I know what you've been doing. Yes, he is going to speak in 14 minutes, and you will have it here live on the show. Do not worry. You are in the best place. Never miss anything. Okay? You won't miss anything. Nothing will happen major until he speaks. Okay? Because it's what he says. It's the tone. It's the tone we are looking for. I mean, we're back where we started today, which is great. You know, we're flat again, but we're going to be green in a minute. Why is the speech important? Okay, the markets trade 6 months ahead. All right? 6 months ahead. We've built into the price. People don't invest their money without knowing where they think, at least, anyways. It's more guessing than anything. But where the markets are going. The prices of our stocks today are valuing where we believe the market will be in 6 months. Obviously, because why would you invest in something today that you had no idea where it was going in the future? That's called gambling. You invest because you study and research, right? So the markets are pricing in the rate hikes of 0.75. We were expecting that. That's why the markets went up. So now what we're looking to find out is what he feels about the future. And if he says, I believe inflation is coming under control, we're going to in December, it's going to be 0.5 or 0.25. He gets dovish. He gets a little bit more, sympathetic to the stock market. People will rally. So it's what the projections are going forward. It's the style, it's the hidden words, what he says, how he says them, which sends signals to the markets. Okay, he'll be speaking in just a few minutes from now. I've got it live with you. Newton, let's bring up Newton's comments here. Speech important because all markets will be affected. Interest rates decide where money goes. If interest rates are high enough, money goes out of stocks and into bank. Basically, what has happened, the stock market has been so beaten up. Bonds have become, the bond market exploded. People sold out of the stocks. They could make more money elsewhere. That's what happened. Interest rates going up. That's what happens. When interest rates can start coming down, when inflation can start coming down, people will start buying the stock market. So what you should be doing is when it's all selling off, like, for example, Meta, for example, if you believe that the fundamentals haven't changed, as I do, you buy it. Simple as that. Now, you might go, well, Meta's rubbish, the metaverse is rubbish. Yep, the metaverse might be rubbish. I don't even like Facebook, but I've still bought it because I like making money. Too many people are... first of all, you have to remember, one, a popularity contest, but two, more importantly than that, the street, the institutions, the big money didn't buy Facebook, Meta 10 minutes ago like you did. If you've just come into the market, you're 16 years of age, you've just come in. They bought this 10 years ago. They're up thousands of %. They've got loads of money. And now they use it as a source of funds. They sell it. There's a bit of doubt around it. Where's metaverse going? They sell it, and that's why the stocks come down. It doesn't mean the value is rubbish. It doesn't mean the company's rubbish. It means they took profits to buy something else. They feel there's better opportunities somewhere else. That's it. So that presents me the opportunity to go back 10 years and buy Meta for what it was 10 years ago. All right, Rocket Labs, let's go to Uranus. Fusion for your 301. Is nuances in the speech more important than the rate, which everyone knew would be 75? Absolutely, that's why it was priced in. Well, it's still gambling, just gambling with better guesses. Yeah, don't tell no one. Don't tell no one, Chris. You're right, it's just gambling. But he's saying he's not done. No, he's not done. There's more rate hikes to come, but they're slowing down. That's the point. Okay, that makes sense. I'm glad it makes sense, and you feel a little bit better today. That's good. That's good. What is the supposed dovish indicator? Dovishness, think of a little dove as opposed to a hawk, right? A hawk, they call it hawkish because basically the interest rates are going up. We're aggressive, like we're a big bear, right? We're for bullish, we're optimistic. We're dovish, we're like a little soft dove. We're landing like a little soft dove. It means if he gets dovish, it means he's going to lower the rate. He's not going to take it away. That would be super dovish, right? If it goes 0.5% in December, he's become dovish. It's a soft landing, and everyone's going to get excited that the interest rates are coming down. Everyone's going to think inflation's coming down, and blah blah blah. Or what makes up the optimism? I think I answered the question there for you. Meta fundamentals are looking sketchy though. King Marty, I've now been promoted to king. I'm now King Martin now. I love it. If I'm going to be a king, I'd rather be an emperor. I'd rather be the emperor if I can. Am I allowed to be emperor? I'd rather be emperor. That's even more important. All right, okay. 500 people now have come through the stream. We need to run a very, very quick commercial break because otherwise I don't get paid. I can't give you any money. We're taking a 10-second break. We'll be right back in 10 seconds. And it literally is 10 seconds. If you see an ad, skip it. Come right back. Here we go. The bloody ad wouldn't work. Damn it! The ad wouldn't work. What's going on there? I got no ad. Damn it. I'm going to refresh the screen. Trying to get what? Basically, if everyone sees the ad, I earn 1 cent per person. That's basically what I get. If you live in America and you invest on the stock market, blah, 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 it's about 1 cent per person. And, that's how I give you my cash prizes. That's how I make money. And that's why the members fund the shows, because that's how much money I make. Not that much. But I don't care. I'll try again now. You might get an ad now. You ready? There you go. Boom. I got an ad. Okay. Get ready. Jerome Powell, just a few moments ago. We're watching it. He hasn't spoken yet. As soon as he does, you'll get it. You won't miss a thing. Back from Twitch account. Bad sounds on Twitch. Staying with YouTube. Twitch sucks and Amazon Prime Gaming not working for me. Amazon Prime Gaming not working for you? Why? What's up? Basically, Stephen, what I want to do is Twitch. More people stream live on Twitch than YouTube. By you subscribing to me, you just go to Amazon Prime, turn on Amazon Gaming, and then it will work. I promise you it will work. You don't have to watch me there. Just subscribe to me, but watch me on YouTube. That's what I'm saying, and you'll be in the free prize draw, okay? Free for everyone. What's your views on Chinese stocks right now? Neo, Alibaba, wouldn't touch it with a barge pole. Is that honest enough for you? Too much lies, too much corruption, doesn't belong on this channel. We only ever tell the truth. We don't like corruption. We don't like lies. So I don't buy Neo. I don't buy Alibaba. I don't buy Russian stocks. I don't buy Chinese stocks. End of story. Is that as clear as I could possibly get? There we go. A smaller increase in December, 0.5. There we go. Interest rates aren't coming down. It's the size of the increase. Interest rates aren't coming down. It's the size of the increase. Correct. Next quarter will be 0.5. So it's going up. Interest rates are going up by 0.5, but we are reducing the increase. So eventually it'll be 0 and then it will come down. That's all we're looking for is the indication. 0.5 for December. My Twitch account. The reason why it doesn't sound great on Twitch is because I stream in 4K. All you have to do on Twitch is reduce the resolution. If you reduce the resolution, you will hear me perfectly. It's because I broadcast in 4K. Twitch can't handle that, but I'm not going to lower the quality just to benefit Twitch. So just click on the resolution and lower it, and that fixed that problem. So about 44 cents. Yeah, exactly. That's why I need memberships. That's why I need memberships. Space, $10 tomorrow. Oh, yeah. Oh, my God. If Virgin Galactic went to $10 tomorrow, I would have $20,000 on Space. That could happen. I don't think so right now. I know it's going to 100,000. Sorry, $100 a share. I know that. I've got no doubt about that whatsoever. But, however, I don't see it going to $10 tomorrow. But if it did, my portfolio would jump from $40,000 to $50,000 in a day. And that would be my very best day. So let's hope for that then, shall we? Let's hope for that. All right, we've got a couple of minutes to go now. Is there any way you can turn CC on? Yeah, you just got to turn it on. You can't turn it on. I can't turn it on for a live show. Unavailable. You mean when Jerome Powell speaks? When Jerome Powell speaks, I can turn it on. Robinhood expected to have a good... is Robinhood expected... tonight we are reporting on... we got 3 minutes to go. Here is the earnings. Sorry, this is Robinhood earnings tonight. We are covering it. Straight after the closing bell, we have Robinhood earnings. Stick with us. It's all here. It's why you need to ring the bell when you subscribe to this channel. If you've not yet done that, I will show you very, very quickly, it has to be quick now, how you subscribe properly. Because if you just subscribe, you don't see stuff. This is how YouTube works. Don't ask me why. This is how you subscribe properly. Because we're breaking news. Click subscribe, and then right next to that, you'll see a little bell. See the little bell? Make sure that you've turned the bell on and it's set to all. That you can go and uncheck it now and you'll see. Make sure it's on all, and if you've done that, then you will be good to go and you will get all the breaking news as it happens, all right? If you've not done that, then you will miss out. And you don't want to miss out if there's any breaking news because I'm live all the time. Tiro will hint in the conference. I know the Robinhood has been expanding with the Q3. Any good? I want to know who is here for the 4K content. I want to know who's here for the 4K content. I need it because I can't train with sound on. Oh, I see. Okay. Getting ready to rumble. Okay, I've got it on for you. Any moment now, Jerome Powell, 2 minutes ago. He'll be on time. He's always on time. Or at least he always has been so far. Earbuds for Martyn's music. Yeah, if you're watching right now, you've got just a couple of seconds to go before we bring it. On the homepage of my YouTube channel, I'm actually the World Piano Man, in case anybody didn't know that. You can see... Hang on a minute, let me refresh that a minute. On the homepage of my YouTube channel is the Martyn Lucas Music Channel. If you want to go and check out my music, you can. It's there for you to go and look at if you want to. Stocks are going up now nicely. Very, very quickly, in fact. There you go. We're really getting excited now. Could hit 45,000 today. No, I don't know. Yeah, could it? Yeah, it could, actually. It could hit 45,000 today. Right. There you go. On the homepage of my YouTube channel, you just scroll. Oh, hang on a minute. I'm going to go to Jerome Powell. We're going to get ready for that now. Here we go. Seconds away. You won't miss anything. You're in the right place. Make sure that you've subscribed and rung the bell and smash the like button. You ready? Wow, 600 people come through the stream so far. Absolutely awesome. Okay, we're getting ready now for Jerome Powell to speak, and when he does, you will have it. Here we go.
Obviously, the CPI prints, a number that
okay, we're getting ready.
Getting out between now and the next meeting is going to be a big focus. What else?
I will bring you the information that you need as it comes.
Next 4 weeks.
It's a big day.
I think consumers.
Go ahead,
consumer spending in addition to just.
We're getting ready now. If you've just tuned in, subscribe and ring the bell and smash the like button. Let's see if we can get record numbers of likes. If we get 100, we might do. We will do. We are the champions at the end of the show. For everybody that's here, we've got the closing bell as well, and we've also got the earnings as well for Robinhood, covering it all live with you. Here he is.
There is the Fed Chair, Jerome Powell, walking the podium. Let's listen.
Good afternoon. My colleagues and I are strongly committed to bringing inflation back down to our 2% goal. We have both the tools that we need and the resolve it will take to restore price stability on behalf of American families and businesses. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 75 basis points, and we continue to anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. In addition, we're continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive stance of policy for some time. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed significantly from last year's rapid pace. Real GDP rose at a pace of 2.6% last quarter, but is unchanged so far this year. Recent indicators point to modest growth of spending and production this quarter. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 289,000 jobs per month over August and September. Although job vacancies have moved below their highs and the pace of job gains has slowed from earlier in the year, the labor market continues to be out of balance, with demand substantially exceeding the supply of available workers. The labor force participation rate is little changed since the beginning of the year. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in September, total PCE prices rose 6.2%, excluding the volatile food and energy categories. Core PCE prices rose 5.1%. And the recent inflation data again have come in higher than expected. Price pressures remain evident across a broad range of goods and services. Russia's war against Ukraine has boosted prices for energy and food and has created additional upward pressure on inflation. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 75 basis points. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. With today's action, we've raised interest rates by 3.75 percentage points this year. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. Financial conditions have tightened significantly in response to our policy actions, and we are seeing the effects on demand in the most interest rate sensitive sectors of the economy, such as housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. That's why we say in our statement that in determining the pace of future increases in the target range, we will take into account the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation. At some point, as I've said in the last two press conferences, it will become appropriate to slow the pace of increases as we approach the level of interest rates that will be sufficiently restrictive to bring inflation down to our 2% goal. There is significant uncertainty around that level of interest rates. Even so, we still have some ways to go, and incoming data since our last meeting suggests that the ultimate level of interest rates will be higher than previously expected. Our decisions will depend on the totality of incoming data and their implications for the outlook for economic activity and inflation. We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. We're taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices in the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Thank you, Colby. Thank you. Colby Smith with the Financial Times. On the need to slow the pace of rate increases at some point, is a downshift contingent on a string of better inflation data specifically between now and, let's say, the December meeting? Or is that something that the Fed could potentially proceed with independent of that data, given the lagged effects that you mentioned?
So a couple of things on that. We do need to see inflation coming down decisively, and good evidence of that would be a series of down monthly readings. Of course, that's what we'd all love to see, but I've never thought of that as the appropriate test for slowing the pace of increases or for identifying the appropriately restrictive level that we're aiming for. We need to bring our policy stance down to a level that's sufficiently restrictive to bring inflation down to our 2% objective over the medium term. How will we know that we've reached that level? Well, we'll take into account the full range of analysis and data that bear on that question, guided by our assessment of how much financial conditions have tightened, the effects that tightening is actually having on the real economy and on inflation, taking into consideration lags, as I mentioned. We will be looking at real rates, for example, all across the yield curve and all other financial conditions, and as we make that assessment.
Hi, Howard Schneider with Reuters. Look, I'm sure there's going to be tons of confusion out there about whether this means you're going to slow in December or not. Would you say that the bias right now is not for another 75 basis point increase?
So what I want to do is put that question of pace in the context of our broader tightening program, if I may, and hit to talk about the statement language along the way. So I think you can think about our tightening program as really addressing three questions. The first of which was, and has been, how fast to go. The second is how high to raise our policy rate. And the third will be eventually how long to remain at a restrictive level. So on the first question, how fast to tighten policy, it's been very important that we move expeditiously, and we have clearly done so. We've moved 3.75% since March, admittedly from a base of 0. It's a historically fast pace, and that's certainly appropriate given the persistence and strength in inflation and the low level from which we started. So now we come to the second question, which is how high to raise our policy rate. And we're saying that we'd raise that rate to a level that's sufficiently restrictive to bring inflation to our 2% target over time. And we put that into our post-meeting statement. because that really does become the important question we think now is how far to go, and I'll talk more about that. We think there's some ground to cover but before we meet that test, and that's why we say that ongoing rate increases will be appropriate. And as I mentioned, incoming data between the meetings, both the strong labor market report, but particularly the CPI report, do suggest to me that we may ultimately move to higher levels than we thought at the time of the September meeting. That level is very uncertain, though, and I would say, we're going to find it over time. Of course, with the lags between policy and economic activity, there's a lot of uncertainty. So we note that in determining the pace of future increases, we'll take into account the cumulative tightening of monetary policy as well as the lags with which monetary policy affects economic activity and inflation. So I would say as we come closer to that level, move more into restrictive territory, the question of speed becomes less important than the second and third questions. And that's why I've said at the last two press conferences that at some point it will become appropriate to slow the pace of increases. So that time is coming, and it may come as soon as the next meeting or the one after that. No decision has been made. It is likely we'll have a discussion about this at the next meeting, a discussion. To be clear, let me say again, the question of when to moderate the pace of increases is now much less important than the question of how high to raise rates and how long to keep monetary policy restrictive, which really will be our principal focus.
If I could follow up on that, to what degree was there an importance or weight given to a need to signal this possibility now, given all the concerns really around the globe about Fed policy sort of driving ahead and everybody else, dealing with their own stress as a result?
Well, I think I'm pleased that we have moved as fast as we have. I don't think we've over-tightened. I think there's very difficult to make a case that our current level is too tight, given that inflation still runs well above the federal funds rate. So I think that at this meeting, the last two meetings, as I've mentioned, I've said that there would come a point, and this was a meeting at which we had a discussion about what that might mean, and we did discuss this, and as I mentioned, we'll discuss it again in December. But there's I don't have any sense that we've over-tightened or moved too fast. I think it's been good and a successful program. That we've gotten this far this fast. Remember, though, that we still think there's a need for ongoing rate increases, and we have some ground left to cover here, and cover it we will.
Nick?
Nick Tamarosa, the Wall Street Journal. Chair Powell, core PCE inflation on a 3 or 6 month annualized basis and on a 12-month basis has been running in the high 4s, close to 5%. Is there any reason to think you won't have to raise rates at least above that level to be confident that you are imparting enough restraint to bring inflation down?
So this is the question of does the policy rate need to get above the inflation rate? And I would say there are a range of views on that. That's the classic Taylor principle view. But I would think you'd look more at a forward-looking measure of inflation to look at that. But I think the answer is we'll want to get the policy rate to a level where it is where the real interest rate is positive. We will want to do that. I do not think of it as the single and only touchstone, though. I think you put some weight on that. You also put some weight on rates across the curve. Very few people borrow at the short end at the federal funds rate, for example. So households and businesses, if they're very meaningfully positive interest rates all across the curve for them, credit spreads are larger, so borrowing rates are significantly higher, and I think financial conditions have tightened quite a bit. So I would look at that as an important feature. I'd put some weight on it, but I wouldn't say it's something that is the single dominant thing to look at.
If I could follow up, what is your best assessment or the staff's best assessment right now of the current rate of underlying inflation?
I don't have a specific number for you there. So there are many, many models that look at that. And I mean, one way to look at it is that it's a pretty stationary object, and that when inflation runs above that level, for sure, substantially above for some time, you'll see it move up, but the movement will be fairly gradual. So I think that's what the principal models would tend to say. But I wouldn't want to land on any one assessment. There are many different, as you know, many different people who publish an assessment of underlying inflation.
Thank you.
Hi, Chair Powell. Thank you for taking our questions. Gina Smilek, New York Times. I wonder, do you see any evidence at this stage that inflation is or is at risk of becoming entrenched?
Is inflation becoming entrenched? So I guess I would start by pointing to expectations. So if we saw longer term expectations moving up, that would be very troubling. And they were moving up a little bit at the middle part of this year, and they've moved now back down. That's one piece of data. Shorter term inflation expectations moved up between the last meeting and this meeting. And we don't think those are as indicative, but they may be important in the wage setting process. There's a school of thought that believes that. So that's very concerning. I guess the other thing I would say is that the longer we have, we're now 18 months into this episode of high inflation, and we don't have a clearly identified scientific way of understanding at what point inflation becomes entrenched. And so the thing we need to do from a risk management standpoint is to use our tools forcefully but thoughtfully and get inflation under control, get it down to 2%, get it behind us. That's what we really need to do and what we're strongly committed to doing.
Rachel.
Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post. The statement points to the lag times. I'm wondering if you can walk us through how you judge those lag effects, what that timeline looks like over the coming months or even a year, and where you would expect it to show up in different parts of the economy.
Yeah, so the way I would think about that is it's a commonly, for a long time, thought that monetary policy works with long and variable lags, and that it works first on financial conditions and then on economic activity and then perhaps later than that even on inflation. So that's been the thinking for a long time. There was an old literature that made those lags out to be fairly long. There's newer literature that says that they're shorter. And the truth is we don't have a lot of data of inflation of this high in what is now the modern economy. One big difference now is that it used to be that you would raise the federal funds rate, financial conditions would react, and then that would affect economic activity and inflation. Now, financial conditions react well before, in expectation of monetary policy. That's the way it has moved for a quarter of a century, is in the direction of financial conditions, then monetary policy, because the markets are thinking what is the central bank going to do. And there are plenty of economists that also think that once financial conditions change, that the effects on the economy are actually faster than they would have been before. We don't know that. I guess the thing I would say is it's highly uncertain. And so from a risk management standpoint, it would be irresponsible not to ignore them, but you want to consider them but not take them literally. So I think it's a very difficult place to be, but I would tend to want to be in the middle, looking carefully at what's actually happening with the economy, and trying to make good decisions from a risk management standpoint, remembering, of course, that if we were to over-tighten, we could then use our tools strongly to support the economy. Whereas if we don't get inflation under control because we don't tighten enough, now we're in a situation where inflation will become entrenched, and the costs, the employment costs in particular, will be much higher potentially. So from a risk management standpoint, we want to be sure that we don't make the mistake of either failing to tighten enough or loosening policy too soon.
And if I could follow up, should we interpret the addition to the statement to mean that more weight is put into those lag effects than they would have been after previous rate hikes?
So I think as we move now into restrictive territory, as we make these ongoing rate hikes and policy becomes more restrictive, it'll be appropriate now to be thinking more about lag. Of course, we think about the lags are just sort of a basic part of monetary policy, but we will be thinking about them. But we won't be, I think we'll be considering them, but because it's appropriate to do so. Let me say this: it is very premature to be thinking about pausing. So people, when they hear lags, they think about a pause. It's very premature, in my view, to think about or be talking about pausing our rate hike. We have a ways to go. Our policy, we need ongoing rate hikes to get to that level of sufficiently restrictive, and we don't really know exactly where that is. We have a sense, and we'll write down in the December meeting a new summary of economic projections which updates that. But I would expect us to continue to update it based on what we're seeing with incoming data.
Thanks, Chair Powell. Neil Irwin with Axios. As you look around the economy, the clearest impact of your tightening so far has been on housing, maybe some venture-funded tech companies. It's been relatively narrow in terms of labor market, consumer demand. A lot of sectors you don't see a ton of effect. Is the pathway and channels through which monetary policy works changing? Is it narrower than it used to be? And on housing in particular, are you at all worried that you're crimping housing supply in ways that might cause problems down the road?
I don't know that the channels through which policy works have changed that much. I would say a big channel is the labor market, and the labor market is very, very strong, very strong. And households, of course, have strong balance sheets. And so we go into this with a strong labor market and excess demand in the labor market, as you can see through many different things, and also with households who have strong spending power built up. So it may take time. It may take resolve. It may take patience. It's likely to get inflation down. I think you see from our forecasts and others that it will take some time for inflation to come down. It'll take time, we think. Sorry, was I getting to your question there? Housing, the housing part of it. Yeah, so, we look at housing. Of course, housing is significantly affected by these higher rates, which are really back where they were before the global financial crisis. They're not historically high, but they're much higher than they've been. And you're seeing housing activity decline. You're seeing housing prices growing at a faster rate, and in some parts of the country declining. I would say the housing market was very overheated for the couple of years after the pandemic as demand increased and rates were low. We all know the stories of how overheated the housing market was, prices going up, many bidders, no conditions, that kind of thing. So the housing market needs to get back into a balance between supply and demand. We're well aware of what's going on there. From a financial stability standpoint, we didn't see in this cycle the kinds of poor credit underwriting that we saw before the global financial crisis. Housing credit was much more carefully managed by the lenders. So it's a very different situation and doesn't appear to present financial stability issues. But no, we do understand that's really where a very big effect of our policies is.
Victoria.
Hi, Victoria Guida with Politico. I wanted to ask about the labor market. You mentioned early on again that job openings are very high compared to available workers, and I'm just curious to what extent you do and don't draw a signal from that. So, for example, if wage growth is slowing and if maybe the unemployment rate starts to tick up, will that make you sort of decrease your focus on job openings? What do you see? Are wages what's really important? How are you thinking about the labor market as it relates to inflation?
So we talk a lot about vacancies and the vacancy to unemployed rate, but it's just one. It's just another data series. It's been unusually important in this cycle because it's been so out of line. But so has quits, so have wages. So we look at a very wide range of data on the labor market. So I'd start with unemployment, which is typically the single statistic you would look to, is at a 50-year low, 3.5%. We're getting really nothing in labor supply now. We had, I think, a very small increase this year, which we had really thought we would get that back. Most analysts thought we would get some labor supply coming in. You mentioned wages, so I guess I would characterize that as sort of a mixed picture. It's true with average hourly earnings you see. So I would call it a flattening out at a level that's well above the level that would be consistent over time with 2% inflation, assuming a reasonable productivity there. With the ECI reading this week, again, a mixed picture. The headline number was a disappointment. Let's just say it was high. It didn't show a decline. There's some rays of light inside, that if you look at private sector workers, that did come down, the compensation did come down. But overall, though, the broader picture is of an overheated labor market where demand substantially exceeds supply. Job creation still exceeds, the sort of the level that would hold the market where it is. So that's the picture. Do we see? We keep looking for signs that sort of the beginning of a gradual softening is happening. And maybe that's there, but it's not. It's not obvious to me because wages aren't coming down; they're just moving sideways at an elevated level, both ECI and average hourly earnings. We want to see. We would love to see vacancies coming down, quits coming down. They are coming down. Vacancies are below their all-time high, but not by as much as we thought because, and that the data series is volatile. We never take any one reading. We always look at 2 or 3. So it's a mixed picture. I don't see the case for real softening just yet, but we look at, as I just showed you, we look at a very broad range of data on the labor market.
So do you see wages as being a significant driver of inflation?
I think wages have an effect on inflation, and inflation has an effect on wages. I think that's always been the case. There's always a going back and forth. The question is that really elevated right now? I don't think so. I don't think wages are the principal story of why prices are. I don't think that. I also don't think that we see a wage price spiral. But again, it's not something you can, once you see it, you're in trouble. So we don't want to see it. We want wages to go up. We just want them to go up at a sustainable and consistent with 2% inflation. And we do think that given the data that we have, that this labor market can soften without having to soften as much as history would indicate through the unemployment channel. It can soften through job openings declining. We think there's room for that, but we won't know that. That'll be discovered empirically.
Thank you so much. Kayla Tausche from CNBC. Earlier last month, the United Nations warned that there could be a global recession if central banks didn't change course. The UK Prime Minister warned of a profound economic crisis there. And I'm wondering how the Fed is weighing international developments in light of a very strong economy here in the U.S. that would seem to be bucking those trends.
So, of course, we keep close tabs on economic developments and also geopolitical developments that are relevant to the economy abroad. We're in very frequent contact with our foreign counterparts, both through the IMF meetings and the regular meetings with central banks that we have, and I have one this weekend with many central bankers. So we're in touch with all of that. So I guess it's clearly a difficult time in the global economy. We're seeing very high inflation in Europe, significantly because of high energy prices related to the war in Ukraine, and we're seeing China's having issues with the zero COVID policy and much slower growth than we're used to seeing. So we see those difficulties. The strong dollar is a challenge for some countries, but we have and we take all of that into account in our models. We think about the spillovers and that sort of thing. Here in the United States, we have a strong economy, and we have an economy where inflation is running at 5%. Core PCE inflation, which is a really good indicator of what's going on for us, is the way we see it, is running at 5.1% on a 12-month basis and sort of similar to that on a 3, 6, and 9-month basis. So we know that we need to use our tools to get inflation under control. The world's not going to be better off if we fail to do that. That's a task we need to do. Price stability in the United States is a good thing for the global economy over a long period of time. Price stability is the kind of thing that pays dividends for our economy for decades, hopefully. Even though it may be difficult to get it back, getting it back is something that provides value to the people we serve for the long run.
If I could just follow up on that. Thank you. The Fed has acknowledged in the past that that the tools that you have don't affect things like energy and food prices that stem from some of those conflicts overseas, and they're some of the biggest pain points for consumers. So as you pursue the current path that you've outlined, is there a risk that some of those prices simply don't come down?
So we don't directly affect, for the most part, food and energy prices, but the demand channel does affect them just at the margin. The thing about the United States is that we also have strong, in many other jurisdictions, the principal problem really is energy. In the United States, we also have a demand issue. We've got an imbalance between demand and supply, which you see in many parts of the economy. So our tools are well suited to work on that problem, and that's what we're doing. You're right, though. We don't, the price of oil is set globally, and it's not something we can affect. I think by the actions that we take, though, we help keep longer-term inflation expectations anchored, and keep the public believing in 2% inflation by the things that we do, even in times when energy is part of the story of why inflation is high.
Hi, Chair Powell. Janelle Marti with Bloomberg. So the Fed is facing two more ethics-related incidents with the revision of the financial statements from President Bostic and President Bullard speaking at a closed event. So some senators, like Elizabeth Warren, are saying that this is a sign of greater ethics problems at the Fed. Could you talk about what this does to the public's trust in the bank and what the Fed is doing to prevent this kind of behavior from becoming common?
Sure. So you're right. The public's trust is really the Fed's and any central bank's most important asset. And anytime one of the policymakers violates or falls short of those rules, we do risk undermining that trust. And we take that very seriously. We do. So at the beginning of our meeting yesterday, actually, we had a committee discussion of the full committee on the importance of holding ourselves individually and collectively accountable for knowing and following the high standard that's set out in our existing rules with respect to both personal investment activities and external communications. We've taken a number of steps, and I would just say we do understand how important those issues are. I would say that our new investment program that we have is up now and running, and actually it was through that the problems with President Bostic's disclosures were discovered when he filed his new disclosures. We now have a central group here at the Board of Governors that looks into disclosures and follows them and approves people's disclosures, and also all of their trades. Any trade anyone has to make who's covered has to be pre-approved. And there's a lag. It has to be pre-approved 45 days before it happens, so there's no ability to game market. So it's a really good system. It worked here. And I think we all said to each other yesterday morning, we recommitted to each other and to this institution to hold ourselves to the highest standards and avoid these problems.
Do you have an update on the investigations that are pending?
I don't. So, as you know, I referred the matter concerning President Bostic to the Inspector General. And once that happens, I don't discuss it with the Inspector General or with anybody. It's just the Inspector General has the ability to do investigations. We don't really have that. So that's what he's doing.
Michael McKee from Bloomberg Television and Radio. Earlier this year, you touted the 3-month bill yield out to 18 months as the yield curve with 100% explanatory power. And you said, quote, if it's inverted, that means the Fed's going to cut, which means the economy is weak. That curve is only 2 basis points away from inversion now. So I'm wondering why you are so confident that you have not over-tightened, particularly given that rates work with a lag.
Well, so we do monitor the near-term forward spread. You're right, and that's been our preferred measure. We think it, just empirically, it dominates the ones that people tend to look at, which is 2s, 10s, and things like that. So it's not inverted. And also, you have to look at why why the rate curve is doing what it's doing. It can be doing that because it expects cuts, or because it expects inflation to come down. In this case, if you're in a situation where the markets are pricing in significant declines in inflation, that's going to affect the forward curve. So yes, we monitor it. You're right, and that's what I would say.
If I could follow up, you also said several meetings ago that the risk of doing too little outweighed the risk of doing too much. Is what you're trying to tell us today is that that risk assessment has changed a little bit?
Well, what's happened is time has passed and we've raised interest rates by 375 basis points. I would not change a word in that statement, though. I think until we get inflation down, you'll be hearing that from me. Again, if we over-tighten, and we don't want to, we want to get this exactly right, but if we over-tighten, then we have the ability with our tools, which are powerful, to, as we showed at the beginning of the pandemic episode, we can support economic activity strongly if that happens, if that's necessary. On the other hand, if you make the mistake in the other direction and you let this drag on, then it's a year or two down the road and you're realizing inflation behaving the way it can, you're realizing that you didn't actually get it, you have to go back in. By then, the risk really is that it has become entrenched in people's thinking, and the record is that the employment costs, the cost to the people that we don't want to hurt, they go up with the passage of time. That's really how I look at it. So that isn't going to change. What has changed, though, you're right, is we're farther along now, and I think as we're farther along, we're now focused on that. What's the level we need to get to rates, and I don't know what we'll do when we get there. By the way, we'll have to see. There's been no decision or discussion around exactly what steps we would take at that point, but the first thing is to find your way there.
Thanks, Chris.
Thank you. Chris Rugaber at Associated Press. Just to go back to housing for a minute, you mentioned the impact that rate increases have had on housing. Home sales are down 25% in the past year and so forth, but none of this is really showing up, as you know, in the government's inflation measures. And as we go forward, private real-time data is clearly showing these hits to housing. Are you going to need to put a greater weight on that in order to ascertain things like whether there's over-tightening going on? Or will you still focus as much on the more lagging government indicators?
So this is an interesting subject. So I start by saying, I guess, that the measure that's in the CPI and the PCE, it captures rents for all tenants, not just new leases. And that makes sense, actually, because for that reason, that conceptually, that's sort of the right target for monetary policy. And the same thing is true for owner's equivalent rent, which comes off of it's a reweighting of tenant rents. The private measures are of course good at picking up at the margin the new leases, and they tell you a couple things. One thing is I think right now, if you look at the pattern of that series of the new leases, it's very pro-cyclical. So rents went up much more than the CPI and PCE rents did, and now they're coming down faster. So the implication is that there are still, as non-new leases roll over and become and expire, right? There's still in the pipeline, there's still some significant rate increases coming, okay? But at some point, once you get through that, the new leases are going to tell you that what they're telling you is there will come a point at which rent inflation will start to come down. But that point is well out from where we are now. So we're well aware of that, of course, and we look at it. And but I would say that in terms of what the right way to think about inflation really is to look at the measure that we do look at, but considering that we also know that at some point you'll see rents coming down.
Great. And just a quick follow. It looks like stock and bond markets are reacting positively to your announcement so far. Is that something you wanted to see? Is that a problem, or how that might affect your future policy to see this positive reaction?
We're not targeting any one or two particular things. Our message should be, what I'm trying to do is make sure that our message is clear, which is that we think we have a ways to go. We have some ground to cover with interest rates before we get to that level of interest rates that we think is sufficiently restrictive. And putting that in the statement and identifying that as a goal is an important step. And that's meant to put that question really as the important one now going forward. I've also said that we think that the level of rates that we estimated in September, the incoming data suggests that that's actually going to be higher. And that's been the pattern. I mean, I would have little confidence that the forecast, if we made a forecast today, if we were doing an SEP today, the pattern has been that one after another, they go up, and that'll end when it ends. But there's no sense that inflation is coming down. It just, if you look at I have a table of the last 12 months of 12-month readings, and there's really no pattern there. We're exactly where we were a year ago. So, okay. So I would also say it's premature to discuss pausing, and it's not something that we're thinking about. That's really not a conversation to be had now. We have a ways to go. And the last thing I'll say is that I would want people to understand our commitment to getting this done, and to not making the mistake of not doing enough, or the mistake of withdrawing our strong policy and doing that too soon. So I control those messages, and that's my job.
Edward.
Edward Lawrence with Fox Business. Thank you, Fed Chairman. So, how big of a headwind is all the fiscal spending to what the Federal Reserve is trying to do to get inflation back to the 2% target?
In theory, it was a headwind this year, but I do think the broader context is that you have households that have these significant amounts of savings and can keep spending. So I think those two things do tend to sort of counterbalance each other out. It appears consumer spending is still positive. It's at pretty modest growth levels. It's not shrinking, but people are, the banks that deal with retail customers and many retailers will tell you that the consumers are staying and they're still they're fine. So I don't know how big the fiscal headwinds are, and they haven't shown up in the way that we thought they would in restraining spending. So it must have to do with the savings that people have.
What about the spending? There's tens of billions yet to be spent. I mean, from the Inflation Reduction Act, the American Rescue Plan, CHIPS Act, bipartisan infrastructure bill. How does that play into your thinking about the future?
It's demand is going to have some support from those savings, and also from the strong demand that's still in the labor market. We still see pretty significant demand and a tightening labor market in some respects, although I think overall I would say it's not really tightening or loosening. So we see those things, and what those things tell us is that our job is going to require some resolve and some patience over time. We're going to have to stick with this. That's just we take all that as a given, but we know what our objective is and we know what our tools can do, and that's how we think about it.
Thanks. We'll go to Nancy for the last question.
Hi, Chair Powell. Nancy Marshall-Genzer from Marketplace. I'm wondering, has the window for a soft landing narrowed? Do you still think it's possible?
Has it narrowed? Yes. Is it still possible? Yes. I think we've always said it was going to be difficult, but I think to the extent rates have to go higher and stay higher for longer, it becomes harder to see the path. It's narrowed. I would say the path is narrowed over the course of the last year, really. Hard to say. Again, I would say that the sort of array of data in the labor market is highly unusual, and to many economists, there is a path to. Ordinarily, there's a relationship to GDP going down and vacancies declining, translating into unemployment, or there's Okun's law. So all those things are relationships that are in the data, and they're very real. Data's a little bit different this time, though, because you have this tremendously high level of vacancies, and we think on a very steep part of the beverage curve. All I would say is that the job losses may turn out to be less than would be indicated by those traditional measures because job openings are so elevated and because the labor market is so strong. Again, that's going to be something we discover empirically. I think No one knows whether there's going to be a recession or not, and if so, how bad that recession would be. And our job is to restore price stability so that we can have a strong labor market that benefits all over time, and that's what we're going to do.
But just real quickly, why do you feel like the window has narrowed?
Because we haven't seen inflation coming down. The implication of inflation not coming down, and what we would expect by now to have seen is that as the supply side problems had resolved themselves, we would have expected goods inflation to come down by now, long since by now, and it really hasn't. Although it has come down, but it's not to the extent we had hoped. At the same time, now you see services inflation, core services inflation moving up, and I just think that the inflation picture has become more and more challenging over the course of this year, without question. That means that we have to have policy be more restrictive, and that narrows the path to a soft landing, I would say. Thanks very much.
So there we go. Hope you enjoyed that. That was Jerome Powell. And there we go. During that, I took some positions. I will share with you what I did. Let me just come out of here a minute. There we go. During that broadcast, I took some positions. Let me just get rid of that a minute. There we go. All right, so the markets, they're saying, didn't react or reacted positively. What they mean by that is it wasn't an all-out 10-15% drop, and we can have that. At the end of the day, it's business as usual, nothing major to talk about. What I did do, however, is I bought some more SoFi and I bought some more Google. During that, it hit my targets, and I took some positions on that. So very, very pleased on that outcome. For me, presents opportunity, and that's all I'm looking for. Remember, you make money on the green days, the red days, and the green days take care of themselves. So what we're going to do now is end this broadcast, and we're going to come straight back with the the closing bell. So we'll be here. We'll be back in a couple of minutes' time with the closing bell. And then, of course, we've got the after hours with Robinhood, the earnings for Robinhood. That comes up tonight. There we go. There's Robinhood earnings, and there is the closing bell right now. So if you want to go there now, you can, or you stay right where you are, and it'll automatically take you there. So we're going to go to the closing bell right now. So we're going to wrap up this show. Thank you very much for being here. We're going to see how we can navigate this. We are losing some money now, but we are triggering our buys. So it's just presenting opportunity as far as I'm concerned. But we'll have a very, very quick break. We'll see you back in just 1 minute for the closing bell. And then we can navigate this, and there'll be some opportunities. So don't go away. Come straight back. Let me just see how many of you are still with me. And then we will be back in just a couple of moments. Yes, nearly everyone is still here. Fantastic. Don't go away. I'll be right back with the closing bell just in 1 minute. If you stay where you are, it will bring you right there on the homepage. It's the next event. We'll be right back in 1 minute from now. Don't go away. Until then, take care of yourselves and each other.